Coming up on Market to Market, a train carrying millions of gallons of crude from the Bakken Shale of North Dakota ignites a massive fireball in West Virginia. And litigants prepare a case for clean water as a municipal utility in Iowa sues counties upstream over excessive levels of nitrates. Those stories and market analysis with Darin Newsom next.
Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it. This is the Friday, February 20 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. America's home builders slowed the pace of new construction last month. The Commerce Department reported this week that U.S. housing starts fell 2% in January to a seasonally adjusted annual rate of just over 1 million units. Leading the cutback was a 6.7% decline in new construction. Still, home building activity had accelerated previously, and over the past year, single-family housing starts increased nearly 20%. Home builders, however, do appear to be less confident in the near term, and a key barometer of builder sentiment fell 2 points this month to 55. Any reading above 50 indicates that more builders view sales conditions favorably. And crude oil continued its roller coaster ride as the world's most heavily traded commodity traded in a wide price range before settling with a weekly loss of more than $2.50 per barrel. Crude also was in the news earlier in the week after a fiery mishap in the east. A massive explosion rocked a railroad town this week in West Virginia, and once again, crude oil from the Bakken is at the center of the incident. A CSX train carrying 3 million gallons of crude from North Dakota to a refinery in Virginia derailed in the town of Mount Carbon. Fireballs were shot into the sky and some of the oil leaked into the nearby Kanawha River. 19 of the 107 tank cars were involved in the blaze. The cars in question did meet the industry's new safety standards, which were adopted voluntarily in 2011. Rail shipments of oil have jumped exponentially in recent years, and the U.S. Transportation Department estimates the 10,000 carloads moved in 2008 increased to more than 415,000 in 2014. That's a jump of more than 4,000%, due for the most part to the oil boom in the Bakken oil patch of North Dakota and Montana. This week's rail disaster in West Virginia serves as yet another reminder that production of just about any raw commodity involves a series of trade-offs. Recent gains in domestic oil production that put the U.S. on a path to energy independence also were blamed for everything from environmental mishaps to earthquakes. Similar pros and cons apply to food production. Nitrogen, the primary fertilizer used in row crops, helped U.S. farmers produce a record 14.2 billion bushels of corn last year. But when nitrogen, which ultimately is converted to nitrates, leaches from the soil or runs off farmland, some experts say it becomes a hazardous pollutant in local waterways. A case in point can be found in Des Moines, Iowa, where local water utility plans to sue officials upstream over agricultural pollution. Josh Bittner explains.
It's a morning ritual in Iowa's capital city. The Des Moines Water Works collects samples from the Raccoon River, the primary source of drinking water for 500,000 central Iowans. The surface water undergoes daily lab analysis to detect possible contaminants, and the data generated informs waterworks officials on how to cleanse the crucial resource, making it safe for human consumption. But one contaminant, nitrates, are ubiquitous in Corn Belt waterways. Nitrates present a giant hurdle, one that has the municipal utility gearing up for unprecedented legal action.
We're very confident that these are clear point source groundwater polluters that are coming from agricultural use.
Waterworks CEO and General Manager Bill Stowe is a controversial figure in central Iowa. At his request, the Des Moines Waterworks Board voted unanimously to issue a 60-day notice of intent to sue boards of supervisors in 3 northwest Iowa counties over high nitrate levels in the Raccoon. While Des Moines has battled high nitrate levels for decades, a surge in awareness and hints of courtroom solutions have increased dramatically during Stowe's tenure. Nevertheless, the threat of litigation broadsided leaders upstream in Sac, Calhoun, and Buena Vista counties.
That's just not the Iowa way of doing things. Mr. Stowe says that they've been talking for 15 years, but I don't know who they were talking to. They certainly weren't talking with anybody that they sued.
Issued early in January, the Notice of Intent to Sue identifies massive artificial subsurface drainage infrastructure as point source pollution in violation of state and federal law. Drainage districts under county jurisdiction are accused of allowing excess nutrients from farm runoff to flow downstream. And while agriculture is currently considered a source of non-point pollution, the pending lawsuit in Iowa ultimately could redefine such distinctions for farmers from sea to shining sea.
Our goal in this rule is very straightforward. It's to respond to requests from stakeholders across the country to make the process of identifying waters protected under the Clean Water Act easier to understand.
With little success, several administrations have attempted to clarify regulatory authority of the Environmental Protection Agency under the Clean Water Act of 1972. And despite EPA actions, ranging from the banning of DDT to removing lead from gasoline, hemming and hawing over ditch and pond provisions for decades has fueled concerns of government overreach.
Given its history of ignorance and indifference towards the needs of rural America, it's no wonder that EPA's assurances are met with skepticism by many in America, but particularly America's farmers.
Under EPA regulations, municipally treated water can contain no more than 10 milligrams of nitrates per liter. And given the amount of nutrient required to grow corn, that can be a tall order in the Hawkeye State.
To grow corn, we have to have nitrogen at the root zone at 40 parts per million.
Nitrate pollution can pose significant health risks, especially to pregnant women and children less than 6 months of age. The microscopic ions actually develop through natural conversion processes of nitrogen, abundant in the air and present in the soil through common occurrences like plant decay and animal waste. Excess nitrogen from urban lawns contributes a share of nitrates, but experts say rural nitrogen application as fertilizer is responsible for most of the pollutant in Iowa's waterways.
It's estimated globally that without the use of nitrogen to accelerate food production, only 1 of 2 people alive on the earth today would be alive.
Now working in the private sector, Dean Lemke was a lead author of Iowa's nutrient reduction strategy before retiring from the Iowa Department of Agriculture. The state adopted the science-based plan in 2013, which recommends wetlands and bioreactors that slow down, capture, and digest nutrient flows. Lemke claims an average of 52% of nitrates entering such landscapes are removed. But sweeping results haven't come as quickly as some demand. When nitrate levels in its intake waterways spike consistently above legal limits, Des Moines Waterworks claims it has no choice but to operate what is believed to be the world's largest nitrate removal facility. The system costs up to $7,000 per day to run. When nitrate levels swelled in 2013, the price tag was nearly $1 million. Late last year, the utility again fired up its 25-year-old equipment, a rarity during the winter. The facility has been running 24/7 since December 4th, and officials offer no prediction as to when it can be turned off. And if things don't change upstream, Waterworks warns the aging machinery won't be able to keep up. Critics charge that even as the urban utility would reclassify rural drainage districts, it is a point source polluter itself. And though legal under its state permit, Nitrates that Des Moines Water Works removes for customers often end up right back in the river, threatening water standards for towns downstream from the capital.
You know, that's a fair criticism at some level. Everything has warts. That's certainly one of our largest warts, but here's the real issue. The nitrate cycle, the nitrogen cycle is very complicated. We did not introduce nitrogen into the system. The producers introduced new nitrogen into the system. We can't clean it quickly enough and deliver it other than to take it out and unfortunately have to put it back.
As far as I'm concerned, he's a bureaucrat looking for a cause that he can put regulations on that cannot be met so he can elevate himself.
Public outcry at the proposed lawsuit prompted Iowa Secretary of Agriculture Bill Northey to hold a series of meetings this winter with citizens in each of the 3 counties named in the lawsuit.
For the previous 5 years, the Des Moines Water Works didn't need to run that nitrogen reduction plant at all. And that doesn't mean that we had solved all the issues, just because that plant didn't have to run. We have work that we need to do.
The head of the Iowa Department of Agriculture and Land Stewardship urged landowners to adopt voluntary measures to lower nitrate levels before drawn-out litigation gives way to widespread federal regulations. Some producers relayed the challenges they face protecting their livelihoods and the environment.
I'd like to tell the people in Des Moines, one of the things I'd like to do is give you no nitrogen. I would like to give you no phosphorus. I would like it all to stay in my fields so that my plants utilize every bit of it.
We're all about efficiencies, whether it be fertility efficiencies or other parts of the management cycle. You know, we want to utilize 100% of our inputs all the time.
We certainly wanted to make sure that they knew that there are a lot of folks across the state of Iowa that are supporting them, certainly a lot in state government, that we got their back. This is important for us to get right.
When news broke of the 60-day notice, prominent voices weighed in quickly. U.S. Secretary of Agriculture Tom Vilsack noted that implementing voluntary efforts to curb nutrients would be quicker than the legal wrangling of such a high-profile case. Iowa Governor Terry Branstad even went so far as to say that Des Moines has declared war on rural Iowa.
The overall goal of the Iowa strategy is 45% nitrogen and phosphorus reduction, which parallels the goal for the Gulf of Mexico hypoxic zone.
In addition to its own water woes, Iowa is a primary contributor to the dead zone, a seasonal formation of low oxygen waters in the Gulf of Mexico, which are incapable of supporting aquatic life. Conservation practices have been promoted for years to reduce pollution, and some see infield sanitation practices as the wave of the future and the best way to avoid intrusive government oversight. Stowe disagrees.
I think of all of the environmental improvements that I've seen in my lifetime, whether it's ozone protection or phosphates out of detergents or lead out of gasoline, they've all come through regulation, not about voluntarily the producers removing them for the greater good. That's not the way the world's worked, and I think history bears that out.
Last year, state legislators in Iowa recommended $25 million in continued funding for the Resource Enhancement and Protection Program. The quarter-century-old environmental program funds a host of water initiatives that get to the heart of the current predicament. But the governor vetoed the proposal, cutting over $11 million to Northeast's department, a top promoter of the nutrient reduction strategy.
Perhaps if some accountability measures were added to the strategy, it would reassure Iowans that our state's leadership was taking the strategy seriously.
Advocacy groups applaud Lemke and others' work as a good step, but say a giant leap is what's needed.
A strategy that doesn't have a timeline or any benchmarks or any consistent quality monitoring is not a goal that can be met.
Lemke claims that documentation does exist for nearly every farm in Iowa through records kept by agricultural retailers. Accessing that information could help kickstart conservation projects.
It's an active effort here to record that progress more meaningfully than we've been able to do in the past.
As a legal showdown looms, Lemke admits voluntary conservation efforts are ultimately subject to economic realities.
Without a doubt, today's economy in the Corn Belt is affected by low grain prices, and farmers are struggling to break even. That's not a good time to ask farmers to make major, significant investments in environmental improvements.
For Market to Market, I'm Josh Bittner.
Next, the Market to Market report.
Wheat futures contracts were pressured this week while corn traded in a more sideways fashion. For the week, March wheat lost 23 cents, while the nearby corn contract moved 2 cents lower. Soybeans flirted with $10 as the March contract gained 9 cents. Nearby meal prices followed suit with an upward move of $15.20 per ton. In the softs, cotton continued its march higher as the May contract improved by $1.34 per hundredweight. Over in the dairy parlor, Class 3 milk futures were unchanged, while the deferred contract gained 18 cents. Livestock prices were mixed this week as the April cattle contract lost $4.70. Nearby feeders were off nearly $5, but the April lean hog contract gained $1.38. In the currency market, the euro lost 3 basis points against the dollar. Crude oil declined by $2.64 per barrel. COMEX gold gave up more than $22 per ounce, and the Goldman Sachs Commodity Index shed nearly 5 points to settle at 416.15. Here now to lend us his insight on these and other trends is one of our regular market analysts, Darin Newsom. Darin, welcome back.
Thank you, Mike.
I want to jump right into this wheat pit. We're down 22 cents today, had a tender from Egypt with a very low price. What does that tell you about the future of the wheat market?
The way I put it, when asked this week about, wheat moving on this Egypt news, I said wheat moves on news that Egypt didn't buy from the U.S., much like wheat moves when traders don't see a unicorn that day. It doesn't really affect the market all that. We don't expect to get any Egyptian business. The dollar, still too strong. Euro, still too weak. You just mentioned how it continues to come down. So right now, we're going to be moving. We're going to see more European wheat move. The wild card's really Russia. Are they going to continue to ship? Are they going to put the bans on their exports and all of this sort of thing? At some point, it still seems that the argument is that we're going to see some U.S. wheat move. I mean, we've got an inverse in the Chicago market in the March to May, something we just normally don't see. So at some point, it seems like we're going to see our exports pick up, but it's just not there yet. Right now, business is still dismal, and it just, you can't foresee what's going to be out there to cause it to change.
And no big news on winter kill yet. Haven't seen a spate of warm temperatures enough to get a good handle on that.
Well, we did in January, and maybe the very first part of February, across much of the southern plains, temperatures were in the 70s, 80s, and there was this fear that the wheat crop itself would think that it was March instead of February, and then, inevitably we are going to get another cold snap across the southern plains. It happens all the time, but wheat's moniker of, the cockroach of the grain world is well earned. You can't kill it, you can try, but it's not going to die. It has to be a whole series of events before I think traders are even going to get very concerned about winter kill at this point.
So producer advice, hold off, hang out until we get some sales and see something move?
This last week was kind of dangerous for the wheat futures market. We saw bearish technical signals formed in Chicago, Minneapolis, and Kansas City. We're now in line to go back and test those previous lows. If they hold, fine. I think then the market, as we get into the spring, maybe we do get a bit of a spring rally heading into the fall, heading into the summer harvest. But if we break through those lows, producers who are still holding wheat could be in a bit of a risky position at that point, because the market could really start to come down. One thing that could help is if the dollar finally starts to break and we finally get to see some of that world business coming back to the U.S.
All right, well, let's jump over to the corn pit. We saw relative stability this week, at least week to week. Talk to us about where this corn market's headed.
Corn market will put you to sleep if you watch it day to day, and that's a good thing because there's so many other markets that are moving all around. I mean, for most of this week, we saw March corn move within a 9 to 10 cent trading range. Deese was in like a 10 to 11 cent trading range. It just wasn't going anywhere. It stayed within last week's trade, or the previous week's trade. So there's nothing to get excited about in corn right now. We're still waiting for ships to get loaded with corn. We're waiting, just as we are in wheat, we're waiting for corn to see this bump up in export activity. The only difference between corn and wheat is that everyone pretty much acknowledges that it's going to happen in corn, and it's still a fat chance of happening in the wheat market. So I think once China comes out of its week-long holiday that started this past Thursday, its New Year's holiday, and we see more South American soybean supplies available, that's when I think our shipments of soybeans slow down and we start to move more corn. And so I think that's what's being anticipated right now. Still seeing bases hold together relatively well. Merchandisers trying to buy the actual cash supplies to meet this demand. So I think it's coming. It's just, right now it's just in a lull and it's going to take some time to break out of it.
All right. Well, now let's jump into soybeans. And I want to talk old crop soybeans first. We are at that line in the sand bumping up against that $10. Darin, do we break through and head higher?
We were able to trade above 10, I believe in the March, I think also in the May contract. Yeah, it had to be in the May contract as well this week, but we couldn't close the March above there. Everything still screams that, all the market signals are still showing this soybean market wants to go up. Makes no sense with South American harvest coming on, with, we just talked about losing business, most likely in the very short term. But the market looks like it wants to go up. It looks like we still have some sort of supply-demand concern going on by the very tight future spreads that we see. So I would say, yes, we're going to see beans get above 10. I think we're going to see the March push higher, but they're going to go into delivery. I think the May is really going to take the reins and start to run. The November may want to try to follow. I think it's showing us the same signals, very little carry out in the new crop forward curve. We've got strong technicals behind the Nov, and again, it just looks like the new crop soybeans may want to try to spend the spring on the upside.
Now, and that leads us right into our Twitter question here from our viewer James in Kremlin, Oklahoma. We've heard a lot on this show and in most other shows about big acreage for beans this next year. USDA Ag Forum's going on. They didn't report bigger acres, and James's question is, what happened with the big increase in soybean acres that didn't show up in the report?
It was never going to happen.
Elaborate, if you would.
The forward curve for the new crop that I just mentioned, the price spreads, say November to January, January, March, March to May, and so on, have been showing a very small carry going back to last harvest, and not just the old crop, but the new crop as well. So while all the talk and all the yammering and all this and that and everything else was talking about we're going to see this 3 to 4, 5 million acre increase in soybeans, market all along was saying they didn't believe it was going to happen. And if they think it's going to happen, the fact that the spreads are so tight, demand must be going up a lot more than what's being anticipated right now. So the bottom line is, we don't know what the acres are going to be. We don't need to know what the acres are going to be. All we really need to know is what the market's view of long-term supply and demand is, and right now it's still bullish.
All right, so hold off on those new crop sales.
I would hold off for now. Again, we have this psychological monster coming at us from South America. If that crop's not as big as what's been projected, fine. Maybe that's going to give us the catalyst for a rally. But I think I would hold off for now. I want to see how these market signals and how these spreads play out over time.
All right. Well, now let's jump down into the livestock market. We saw fat cattle fall back again this week, down another $4. Very light cash trade. Where is this market headed?
A few weeks ago, we put a low in the April contract down around 145, and again, according to its charts, it looked like that may be its low, that we may be trying to build off of that. We saw a few weeks rally. We're right back within striking distance. I think I saw it close to something like 148 or something like that. So like many other markets, the short-term cattle outlook is really dicey right now. It needs to hold that previous low. If it doesn't, and if the future spreads again in the cattle start to get more bearish, meaning that we're not going to see much cash trade, that we're going to see lower cash trade when it does start to move, this market could look at setting a new low. I wouldn't anticipate it. I think we're going to hold that old low. We're going to stabilize and then start to build off of that. So for that to happen, we have to see the cash market come back next week, week after that, and I think we will.
Well, when we talk about the cash market coming back, it really never left.
True.
In the sense that we've been roughly 160,
True.
162 to I think 158 on Friday.
And that's been the support in the cattle market, the fact that we haven't really been able to break the cash market hard. So who does that cast the light on as far as selling this thing off? Investment traders. They got out of their positions. And this is what drives producers crazy. When you get this divergence between what's going on fundamentally and what's going on in the investment world, at some point it has to, the theory is it has to turn back around. Doesn't always, but you would think that pretty soon the money's going to follow the cash.
And you see the same thing happen in the feeder cattle market, or that cash has pulled lower?
That cash has pulled lower, and a lot of this again goes back to what are we going to see in corn. If corn's able to stabilize, maybe we continue to see some pressure in the feeder cattle market. But if corn does back off in here for the next, say, 3-4 weeks, I think that's going to give feeder cattle a chance to move higher, particularly if live cattle start to move up again. We saw that here a few weeks ago where feeders were able to follow fats higher. Again, I would not be surprised if the feeder cattle market doesn't test its old low. but I don't know that it wants to go to new lows.
All right. Now, in the hog market, looks like maybe we found a bottom. Do you think up a little bit this week, $1 and some change?
Yeah, and again, we have the divergence between what's going on fundamentally and what's going on in the investment world. This market got beat up so bad, it was just driven into the ground. And it looks like right now we've got some of that short covering coming back into the market. We've got, we got a little bit of a bounce in the hogs this week. But on the cash side, on the spreads, we didn't see it happen. In fact, we continue to see pressure. So while technically it looks like this market should start to turn around, and it may short term, it's going to have a hard time holding any gains until we start to see some support coming in from the commercial side.
And there just hasn't been the demand resurgence that they'd expect at these pork prices.
No, there really isn't, and that's the problem. I mean, you look at this April-June spread, and some people are going to point, well, maybe it's the port strike out west. We were having problems before that happened. So, I think it's got some issues to solve, and until we see that commercial buying coming back in, saying, hey, this market's undervalued, this is a good buying opportunity from a commercial point of view, this market's going to continue to struggle. Again, could see a short-term rally, but I'd like to think that the low is in. I think it's got some work to do first.
Could face some headwinds.
I think so.
All right. Well, thank you so much for joining us this week, Darin.
Oh, thank you, Mike.
That wraps up this edition of Market to Market. But you can find expanded market analysis as well as streaming video of our program, all free, at our website. Now, we want to let you know that Market to Market may be airing in some different time slots in the days ahead due to PBS fundraising activities. So if you value programs like Market to Market, please consider phoning in a pledge and investing in a service providing you with accurate information and timely market analysis. And until next time, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it.